Mahesh Patil joins us with Birla Sun Life AMC. He's been promoted as the head of investments now, both for debt and equity. So, Mahesh, where is the party?
No, I think market is doing fairly well actually to hold on to these levels. Again, looking at the current situation in the domestic side, the second wave, and I think global conditions are still
Sir, my
fairly
first
good.
question.
Globe has seen a peaking out of the coronavirus, and global growth outlook is fairly strong. So global financial conditions remains good, and that's what's helping us. Having said that, I think domestically, I think the second wave, what we are seeing, while it is a cause for concern from a short-term perspective, but if you really look at the data, I mean, the numbers are alarming at this point in time. But there is some kind of a visibility inside that you should see an end to it coming through, because we see the vaccination drive is gaining momentum, and bulk of the population above the age group of 45, which is at serious threat in terms of, if you look at the fatality rate in that cohort, it's around 85%. So by within a month's time, I think you should have more than 50% of this population getting at least one shot of vaccine. And that should, I think, put the fatality rate should come down dramatically after that. So I think I would say that it's a matter of a month or so, okay, where we think things starting to again come down, the number of cases. Mumbai is already showing that it has looked to have peaked out. So while it will have an impact on the in this first quarter, but I don't see that having a lasting impact in terms of the overall recovery, what we're expecting in this year and going forward.
Mahesh, okay, I completely, buy the thesis or the template, which is that it's a matter of hopefully a month, 6 weeks, where things will start stabilizing. But in the interim, Mahesh, the sheer number and the sheer damage which will happen to some of the earning population is going to be huge. The numbers are so large this time that there would be job losses. There would be a problem for wage earners. There would be a problem on all strata of society. So what happens to a retail dominated franchise? What happens to banks which have given large unsecured loans? We spoke to the SBI MD yesterday, and he said, look, it's too early for me to comment on anything because the data has not come out and you have to wait for at least the May data to understand the real impact. So what happens in the interim? Do you think somewhere we need to be careful of retail facing banks, NBFCs which have unsecured lending?
Nikhil, you're right about that it will have some impact, and it will be probably more limited to a certain segments, okay, of the economy, especially as you mentioned, the retail sector. Okay, you could see, again, the lockdowns, what we are seeing, will have a temporary impact in terms of revenues in this quarter. Also, the most vulnerable segment is the self-employed and the small and medium enterprises, really, which are probably just coming out of the first wave. They got some support from the banking system. Liquidity was made available. But now, again, I think one has to wait and see if this lasts for a longer period of time. Then that segment could clearly come under a bit of a pressure. And to that extent, I think one needs to really watch out. But it will be only very specific. I mean, for the broader market, I think some of the companies which are global linked, right? Last time around, we had a problem both domestic as well as global. So right now, if you look at sectors like IT, again, is showing a very strong growth. Pharma is steady. Metals and commodities are doing well. So the pressure on the large corporate, which was there, I mean, earlier, which is not likely to be at this point in time. So from a banking sector perspective, clearly the large corporate should do fine. A lot of companies like in the metals, commodities, which had stress earlier, I think they are now doing well. It's only the small and medium enterprises is where I think one needs to watch out and see how they perform in the coming quarters. And again, what kind of a help comes in from the government or the RBI in terms of dispensation, I think will decide, okay, how this sector behaves in the coming quarters.
Do you think the uptake in pharma of 15 to 20%, which has come because of the COVID rush, is more like a sentimental uptick? because frankly the uptick which will happen in some of the pharma companies because of COVID business, that would be temporary in nature. Is the time to lock out of pharma, given that pharma stocks in a sense have got a sentimental booster, not for the right news, but revenue is revenue. It may be COVID revenue, but it's a revenue, but this revenue is short-lived.
Look at the pharma sector, it had underperformed. I mean, it ran up earlier in the first part of last fiscal year. But for the second half, we've seen the sector was a laggard. Okay, when we saw the cyclicals starting to do well and pharma took a backseat. So it went through a period of consolidation, and I think we're seeing a sector rotation coming back into pharma, because there the earnings impact is not likely to be adverse. In fact, as you mentioned, some of the companies will probably get some boost on the COVID portfolio because of sudden surge in demand over there. Yeah, admittedly, this would be short-lived, and market will look beyond that. But I think companies which are showing a steady growth have got a decent pipeline of new products which will come in and sustain the growth rate. So pharma sector looks fairly decent at this point in time. Some of the few companies which have just gone up because of the impact of positive impact of COVID-led growth, I think that will moderate down. It will be short-lived. But I think the overall growth, what we're seeing on the domestic side and in terms of new products, I think that will drive the pharma sector going forward. So I think, one should overlook the short term. I think also vaccination, I think, right? That's another dimension which has been added because I think vaccination is going to be there longer term. It's not going to be a one-year phenomenon. So companies which have got that portfolio, I think market is adding some value to it more from a longer term perspective. So I think given that, I would say the pharma still looks okay. But the spurt what we see in a few companies because of only COVID-led, I think that one is to be careful and factoring in.
Mahesh, wanted to get in your take as to what the sentiment could look like now going forward when it comes to the real estate space, because just a couple of months ago, or even a matter of a few weeks ago, we were talking about how things had certainly improved within real estate. Going forward, what are you looking at by way of pricing trends as well as outlook on demand in the listed players?
The real estate sector, last quarter we saw a good pickup over there. Also aided by in states like Maharashtra, where there was a stamp duty cut. So we saw a good amount of bookings over there. That could moderate down a bit. But by and large, I would say the real estate sector is on the path of recovery. The overall conditions which are there, that still continue to remain the same. Low interest rates, I think that's not going to go up in a hurry. It looks like it will remain low, below 7%, what we are currently. Property prices are also stable, mild correction, what we've seen. I don't see property prices going up in a hurry. So the affordability gap still remains fairly good compared to what it was, say, 5 years back. And that will, I think, see a revival in the sector slowly and steadily. The current concern, what we see because of the lockdowns, could have a temporary dampener in terms of new bookings. But I don't see that really altering the medium-term outlook for the sector, which we see it reviving. There's a genuine demand, which is now coming back to the market. There are new projects which are coming into the marketplace, which are targeted at the particular segment. Also, the funding availability to the sector has improved significantly. I mean, the sector was going through a major problem in terms of funding availability. Now, I think now the market is clearly segregated and the players are also clearly segregated. So the better developers are now getting funding, in fact, at a much, much lower rate. I mean, some of the AAA developers would be borrowing at say around 9% or so. So that is going to aid in long term in terms of revival of this sector. And the deleveraging which we are seeing in some of these players trying to sell off their assets, especially the rental assets. The REIT market is doing fairly well. There is good interest there from foreign investors. So given that, I think the sector is on a path of recovery and it should continue to do well. Yeah, I mean, the current impact what we see will have some dampening in the near term, but should not alter the long-term outlook for the real estate sector.
All right. And Mahesh, owing to what we've seen with the outlook on crude oil prices, how are you betting on the energy space?
So crude oil prices, our view is that prices over a medium term should kind of moderate down a bit. We don't expect crude oil prices to really go up. I think at the current levels is a level where I think it will consolidate. The secular outlook for demand for crude oil is going to be down because I think the emphasis on alternate fuel and also on electric vehicles, okay, which will gather steam, especially in US, I think. So that will ensure that the demand side remains fairly subdued. It's a market which is being controlled, right, on the supply side. So crude should behave fairly okay. I think should move into this band what we are seeing currently. And I think, we are not seeing really any big play on the crude side in the oil and gas sector because structurally we think this sector is likely to see pressure on prices. But I think with low crude oil prices, it is, or probably crude prices maintaining over here and not really going up because we've seen a big spurt in commodities, right? Other commodities on the back of surge in demand after the COVID crisis. Fortunately, crude prices have gone up, but they're still within manageable levels. So I think that is structurally good for India in the current environment where we're seeing a flare up in other commodities.
Mahesh, also wanted to discuss about your NFO, which you're helming yourselves. And, it looks like it's a well-spread platter, and the opportunity to mandate and select from a broader range of sectors and companies as well is what multi-cap captures. Tell us a little bit more about this fund and what are the categories of stocks and sectors in it?
So this multi-cap NFO is, as you know, it's a new category which has come out by SEBI where minimum 25% needs to have in each of the categories, which is large cap, mid cap, and small cap. So while it's a multi-cap, it can be looked positioning wise, it's like an aggressive flexi cap fund with minimum 50% in mid cap and small cap, but typically varying between 55 to 65%. So that's in terms of the positioning of this fund. And we believe that at this part of the cycle where we are, economic cycle where economic growth will definitely recover, barring this short-term pain what we are going through. But structurally, we are positive on economic growth over the medium to long term. And in that period, we see that the market breadth improves, the mid-cap and small caps do well in that period. We have seen that similar in the period of 2004 to 2008 and 2013 till 2018. And in that scenario, I think a slightly higher allocation towards mid and small cap, which this fund offers, should do well to generate that, additional returns. So that's in terms of the positioning of this fund. The way we are looking at this fund is like the focused. So we are looking at it's a focused large cap, focused small cap, and a focused mid cap, with best of the ideas from our internal research analyst team getting reflected in this stock. Say around 15 odd stocks in the large cap, 15 odd stocks in the mid cap, and 15 odd stocks in the small cap space. And the broader themes which we are looking at where we are, see a good trend going forward are, clearly the move from unorganized to organized. I think post-COVID, it's gained acceleration. And many sectors, whether it is retail, apparel, footwear, consumer durables, home improvement, we see that trend continuing. And the per capita income as it goes up, penetration levels in this sector will also improve. So that's a more structural theme which we are looking at. And most of the stocks in these sectors are in the mid cap and small cap space. Another important theme which we see play out is the focus of the government on the production-linked incentive schemes, which has been rolled out across sectors. It's seeing a decent interest coming up, and it opens up a market not only domestic but also for the global market. So many companies in the sectors, whether it is consumer electronics, textile, auto ancillaries, pharmaceuticals, are companies which could benefit because of this investment. And as a corollary to that, we should see a pickup in the private sector capex, and that should drive demand for industrial capital good companies, okay, which we'll be looking at. And then besides that, I think certain sectors like chemicals, for example, specialty chemicals, it's a theme which has been played out well in the last 3 years, but there's a long runway to go there. I think India's share of the specialty chemical market is just about 3% or 4% compared to China, which is around 30%. And there's a big shift which is happening from China to India that should benefit some of these companies, and India companies have done well in that space. So that's another long-term theme which we are looking at. And then finally, the digital disruptors. The whole pace of digitization has gathered momentum after the COVID crisis. And many companies which are focused on that are likely to see the benefit of that coming through. So it's not only the IT sector, which is benefiting in terms of more business, but some of these digital disruptors and enablers are also the companies which we see a good growth in the coming years. So these are some of the themes which we would like to see, play out as they play out over the next few years. We will look at opportunities in these sectors to be a part of this multi-cap fund.
Mahesh, just wanted to understand where is it that you stand right now in the entire reopening trade? Because just when you thought that hotels, aviation, hospitality is beginning to pick up, we've again seen this spike in cases all across the country, and again these stocks have begun to correct. Would you say that they've corrected enough from last year to now to have a buy position? And should you even be looking at buying hotels, hospitality or aviation right now? Because, the future is looking gloomy. Sure enough, COVID is not going to stay forever, but it may be a long road to recovery.
So I think one thing is clear compared to what it was during the first phase. At least there is visibility. We know there is a vaccine which is there. There are many other companies which are coming up with vaccines, so the supply should get addressed in a month's time or so. There are also some medication which is coming in, to address COVID, which work is going on. There's a nasal medicine which is more effective. So I think you should be, there's a clear roadmap in terms of seeing that, say around 6-9 months down the line, you would probably be in a kind of a normal environment. So next fiscal year, I think there is fairly good chance that, with more certainty, we can say now that we should be in a normal environment. And that's the time when I think some of these companies, these recovery plays, I think should see a strong comeback over there. However, one needs to really keep in mind that because of the second wave, there's going to be an impact on the balance sheet of some of these companies because they might incur losses. So within that sector, companies which have got a stronger balance sheet and able to withstand this phase, the second wave also, I think they will come back with vengeance, I think, in the next fiscal year. So I think depending on the valuation and what they offer, I think the market will definitely look at FY23 numbers and then try to value these companies. And this correction can be an opportunity, but as I said, one has to be careful and look at companies where the balance sheet remains strong, because otherwise they will have to further raise capital and there could be equity dilution, which could weigh down on these stocks. But I think there could be there could be an opportunity here if there is a meaningful correction and the stocks are available at attractive prices over there, because I think 23 will be a year where you will see a definitely bounce back in some of these sectors.
Stay safe, and thank you for joining us.